So we're going to be talking today about FOMO, the fear of missing out on trades, and we're going to be specifically talking about 3 strategies for overcoming FOMO. So I'm going to be approaching this topic as a psychologist, and you can see my academic affiliation there, and there's my blog site, Trader Feed. So, we often hear common sense advice about how to deal with FOMO. Take a break or take a deep breath or whatever. No, no. We're going to look at this psychologically and talk about specific evidence-based psychological strategies for overcoming FOMO. What does evidence-based mean? It means it's based in the outcome research in psychology. And that's why I teach at the medical school, our evidence-based strategies for changing our behavior. So we're going to be applying it to the trading situation. Any questions, any comments you have, any smackdowns? It's all good. Yeah, feel free. Okay, so let's get into it. Now here's the big idea. What does FOMO stand for? Fear of missing out, fear of missing on opportunities. The key word is fear. FOMO is an anxiety. FOMO is a fear. Fear and anxiety occur when we perceive threat. The problem, this is a very important concept, the problem is not that we have missed a potential trading opportunity. The problem is that we perceive that to be a threat to us, to our success, to our future. So once something becomes a threat, we go into stress mode, and literally our brains respond with what's known as a fight or flight response. We're priming ourselves for action. How do we do that? The blood flow, if we were in a functional magnetic resonance imaging machine, we would see the blood flow in the brain go from the frontal cortex to the motor areas of the brain, priming us for action because we're perceiving an emergency, right? Now, what goes on in the brain's frontal cortex?
Higher level thinking?
Higher level thinking, judging, planning, all the things we're supposed to be doing when we're trading well. The blood is flowing away from those regions of the brain into the action areas. So as long as we perceive threat, we're going to be shifting our blood flow to a more impulsive, action-oriented mode rather than focusing our mind. Okay? The key to overcoming fear is taking the threat out of the situation. We're always going to miss opportunities. Where have some of the biggest opportunities been recently in financial markets?
Crypto?
Yeah, in crypto. Some big opportunities in certain commodities. European power. I work with some teams that trade that. Some big moves. Guess what? All of us missed every one of those moves. Why aren't you upset? If you're afraid of missing out, you missed out on some big moves. Okay? You can only trade what you focus on, and none of us has perfect focus. So we want to take the threat out of that, which means we want to normalize that. Rescuing Mollyruth. Mollyruth is a cat that we recently adopted, very recently adopted. And she is from Thailand, and she's known as a cow mani. a rather rare cat. But poor Mollyruth her owner died, and there was no one available to adopt her, and so she was placed in an animal shelter under not very good conditions. And she had never been in that sort of situation. She's in a cage, unfamiliar environment. She was really traumatized. She was really upset. When we went to see her, she was cowering in the back of her cage. She wouldn't let anyone near her. So we ended up adopting her, and the reason for it was my wife wanted to pick her up. And I said to her, don't do that. She's so fearful. You're going to really scare her. Well, my wife did pick her up because my wife's much smarter than I'll ever be. And so Margie picks up Mollyruth. And what does Mollyruth do? She starts purring and purring and purring because in the shelter, no one had been really loving her. So that convinced us, okay, we got to get this cat. But it's been a real chore. We have to create gradual experiences of safety for her. She's in this totally new environment. Everything is potentially threatening. So what we do is, and this is a key psychological idea, we tap into motivations that are stronger than the fear-based motivation. Now, for little Mollyruth, what motivation is stronger? The motivation to eat, because she wasn't given very much food in the shelter. And so we took the food, the cat food, and I put the cat food on my fingertips and held it close to her. And she was hungry, and so she goes closer and closer to the fingertips, and she starts licking the fingertips and eating the food, and that gives me a chance to pet her a little bit and do that again and again. And so gradually, we create experiences of safety, experiences where she sees that the fear it's not really scary. It's not really a threat. We're taking the threat out of it. But we're tapping into a motivation that's stronger than the fear. She wanted the food more than she wanted to avoid us. Okay? So let's look at how that psychological principle can apply to FOMO. Okay, so the question is, what motivation is greater than P&L? Obviously, we're motivated to make money. That's a big purpose of trading. But if P&L is the measure of our value, of our worth, then anytime we lose P&L, anytime we go into drawdown, we're going to feel worse about ourselves. So that allows it to be a threat. We have to find a motivation that's greater than P&L. For successful traders, the motivation that's greater than P&L is the desire to learn and grow. The people who don't last in the business, it's all about making a quick buck. But the people who really become successful as traders, they're always learning, always developing. Some of the successful traders here at SMB, I worked with them when they were much younger. I know how they traded back then. I see how they trade now. They have learned so much. They've developed in so many different ways. And that's going to be true for you as well. And so they keep score with their learning. They keep score with their growth. And they keep longer-term statistics on their trading. You're familiar with the statistics from TraderView. To document that they're getting better. They're trading more size. They're trading with consistency rather than just looking at their absolute returns. Because if they're consistently profitable, they're going to get more and more risk bumps. And that's going to make them successful in P&L terms. So they are measuring themselves on the basis of consistency of profitability, not magnitude of profitability. That learning and growing motivation is not threatened by the fact that we are human. We sometimes lapse in our attention, and we miss an opportunity. Does that change the fact that we're learning and growing? I mean, it's a disappointment if we miss a good opportunity. I've traded since the late 1970s, to give you an idea age-wise. So I've missed a ton of opportunities. But if my goal is to be developing and learning and growing, it's a pothole. That's all it is. It's just a bump in the road. It's no longer a threat. So how we judge ourselves, how we grade ourselves, determines what is a threat and what is expectable. I love that quote. The secret to permanently breaking any bad habit is to love something more than the habit. Okay? There was a time in my life when I had some not very good habits. And I was not real happy with my life situation, and I was drinking too much. And it was right around that time that I met my wife and we started a family. And did I really want to be impaired for them? I mean, I could fuck up my own life. I certainly was capable of doing that. But I wasn't going to do that for someone I loved, and she had 3 children by a prior marriage. I certainly wasn't going to do that for children. That's not going to happen. So loving something more than the habit, in this case, loving your growth, your development, your future as a professional, that's so much more important than the day-to-day P&L. Okay, so let's go through 3 strategies, again, research-based strategies for overcoming any kind of fear or anxiety. The first strategy is known as exposure therapy. What we're doing in the first step of exposure work is we're training ourselves in relaxation. So we're teaching ourselves visualization. So we visualize something peaceful and relaxing. And while we're visualizing, maybe I'm visualizing myself walking on an empty beach and I'm feeling the sun and the waves are coming at my feet. I'm breathing very deeply and very slowly letting it out, very deeply breathing. And so with the slowed breathing, I'm slowing my body down. Now, remember, the fear response is fight or flight. If I slow my body down, that's the opposite physical response to fight or flight, right? So I'm slowing my body down and I'm focusing my mind. I'm not getting all frantic. I'm focusing my mind on something very peaceful and relaxing. Okay, that's stage 1. That's step 1 of the exposure work. Step 2 is we create what's known as an anxiety hierarchy. We take scenarios from the least threatening at the bottom, that's number 1, then we go number 2, number 3, all the way up to the most threatening scenario. So like the least threatening might be, you miss an entry on a trade early in the session and you get back in a little bit later. Okay, I mean, it's not a huge threat, but it's a little bit frustrating. Number 2, number 3, number 4, you create different scenarios that would be a little bit more threatening, like a drawdown scenario might be a little more threatening. Or market starts to move and your screen goes dead. And then at the top would be big drawdown scenarios, big threats, big losses. So in the exposure work, you create this hierarchy, and once you have gotten good at the relaxation work, and that takes practice, and typically you'll be doing that for a week or more to get really good at it. So it's important to master that first. Then, instead of visualizing being on the beach and being all relaxed, you are visualizing the first item in your hierarchy, which is a frustrating scenario, something that has a degree of threat. while you're breathing deeply and slowly and keeping your body very still. So think about what you're doing. You are pairing the threatening scenario with the slowed breathing, and you're focusing your mind on that scenario. So you're staying focused and staying calm while you're vividly visualizing a threatening situation. Now, what's going to happen if you do that 1 time, 2 times, 3 times, 10 times, 20 times? What's going to happen?
It becomes natural.
It becomes automatic. It becomes natural. It's the repetition and the pairing of the repetition. The pairing of the threat with the relaxation response means they become paired in our mind. And so we learn a new connection. And actually, there are changes in blood flow as a result of doing this kind of work. This is the #1 psychological treatment for phobias, for PTSD, whenever people have significant anxieties. Okay? So it takes daily practice, and many times we'll do it more than once a day. But once you create that connection, you've got it for life. It's the repetition that takes the threat out of it. You're literally training mind and body to stay chilled, even in a situation that could be a frustrating situation. Okay, that's exposure work. And by the way, as we go forward in our working together, if these are techniques you would like to use for yourself, I can help walk you through them and adapt them to your particular situation. I'll put food on my fingertips and you can, no. That's a little too kinky, man.
So can you kind of correlate that to like Pavlov's, basically?
It's a very good question, and yes, because it is a behavioral therapy and you are teaching a stimulus-response connection. You can think of it in Pavlovian terms, and so it is a kind of behavioral training.
It's CBT, right? It's cognitive behavioral.
It is one form of CBT. Now, CBT is cognitive behavioral, and the second techniques we're going to be talking about are purely cognitive techniques. Okay. But the two are joined together, CBT, because both are learning techniques in therapy. Yeah. So yes, if you were looking up exposure therapy, or if you were looking for a book, you might look at a book on CBT, and this would be in the book. But you can Google exposure therapy, and you'll see a ton of things. So in cognitive work, we are not changing our behavior patterns in that Pavlovian way. We are changing our thinking patterns. We're changing how we think about these missed opportunities. The idea being, as we talked about earlier, is that our thinking creates our responses. That if I view missing opportunities as a sign that I'm no good or I'm such a failure, or if I view it as a threat to my development, of course I'm going to react negatively. So the idea of cognitive work is that we can learn new ways of thinking. And we can process in our thinking, so it's not with the body and the relaxation work, it's by reprocessing in our mind, we can take the threat out of the event. Okay? The way that this is traditionally done is by keeping what's called a cognitive journal. And the journal consists of 4 columns on sheets of paper, A, B, C, D. Column 1 is A, the activating event. So that's the specific situation that got you upset. In this case, it would be missing the opportunity, right? B reflects your beliefs about that event. Your beliefs mean your self-talk. Why is this upsetting to you? Well, I'm telling myself it was such a great opportunity. Other people, got the opportunity. I didn't. They're going to get, ahead of me in their development. It means I'm not as good as them. All the negative thoughts going through your mind, that's what you put in column B. Okay, so you're writing out the negative thinking. So you have the activating event, what happened, your self-talk, column B. C, and this is very, very important, are the consequences of the negative thinking. How is it making you feel? How is it affecting your future, your subsequent trading? You know, I'm so bummed out and I'm beating myself up over missing an opportunity, I go ahead and miss the next one, you know? So you are tracking the negative consequence. And some of the negative consequences might be that you're just stressed out, that you're unhappy, you're upset, but all the different negative consequences. And that's where you start the journal, is just with ABC, so that you get very good at recognizing in real time when activating events are activating you, and you're getting really good at identifying your negative beliefs, and you're getting very good at identifying the consequences of those. The idea here is that we change our patterns of thinking, we change our patterns of behavior, often because the consequences become so front and center to us that we just don't want to go back there again. Like, I can't keep doing that to myself. I can't keep beating myself up over missed trades because that's making me worse, it's making me unhappy. So, interestingly, and this is something I teach to the students in Syracuse, one of our best motivations to change is hate. Because if we hate our negative patterns, we're going to push them away. We don't want any part of it. If I hate something, I don't want it in my life. Okay? You want to be so aware of the consequences that you hate them. That's what gets people, in AA past their alcohol problems. At some point, the consequences build up, and I've lost my job, I've lost my marriage, I've lost, my health. I can't do this anymore. I got to change. This is killing me. So that's what C is all about, and you get better and better and better at identifying the negative beliefs, but also emotionally connecting with the consequences. Column D stands for disputation. Means you're disputing the negative thinking. It's like you talking back at that negative thinking. And as I've written in a couple of my books, one of the favorite ways I have of doing the disputation is just to think about how you would talk to someone else you care about who is in that situation. Okay? So if someone who you're on a team and your teammate misses an opportunity, how would you want to talk to them? If you're mentoring them, if you're a teammate of theirs, how would you want to talk with them? What's that?
You want to pick them up. You don't want to beat them down. You want to pick them up and
You want to
go to the next one.
Yeah, it is a missed opportunity. You'd hopefully help them learn from it maybe, but you're not going to beat them down. There's more to you than this one trade. You would be encouraging, you would be caring, you would be supportive, you would be constructive. You would help them learn from it. The irony here is that many times we know how to talk with other people in those situations, but we have trouble doing that for ourselves. Column D is all about talking to yourself the way you would talk to a best friend. Talking to yourself, not in, like people talk about positive thinking. If you miss a great opportunity, no, it's not positive. It sucks. But you want to be constructive. The way I put it with the SMB folks is, from everything, you want to take away a learning P&L. Sometimes we don't take a monetary P&L, we take a loss. But what do you learn from the loss? What has it taught you about the market, about the stock? What has it taught you about how you place your orders, how you size things? There should always be a learning P&L. And so when someone misses an opportunity, you would talk to them about the learning P&L. All right, what can you take away? How can you make sure it doesn't happen again? That's how you want to talk to yourself. That's column D. Okay? And imagine doing that every single day. A, B, C, D, A, B, C, D, A, B, C, D. You get very good in real time recognizing the negative thinking. You get very good in real time seeing the consequences, like I don't want to go here. And you get very good in real time reframing, talking to yourself more constructively, so that eventually you get to the point where you kind of like slap yourself, oh, there comes that negative thought again, but it doesn't disrupt you. You get really good at putting yourself into a more calm, focused state because you've taken the threat away from the situation. And strategy number 3, Barbara Fredrickson, psychologist, calls it broaden and build. One of the major reasons why we get caught up in P&L is because we don't have enough other positive things going on in our lives. The metaphor I use in this situation is if you are investing your money, you want to be diversified. Some of my money is in fixed income instruments like bonds. Some of my money is invested in our home. Some of it is in stocks. The idea is you are diversified so that if one investment goes down, the others may be going up. It gives you balance. So the question becomes, what is your life portfolio? How balanced are you in your life? If all you're doing is trading, you hear people talk about, oh, I have such a passion for trading. When I hear that, I do interviews sometimes for people who want to join. When I hear that, oh, trading is everything to me, I spend all my time. Like, no, dude, get a life, You're going to be vulnerable, and so, yes, trading's important. Yes, developing yourself in a career is important, but relationships are also important. Having personal interests outside of your work, very important. Your physical well-being is very important. Your spiritual well-being. You want to have a diversified life portfolio. So when the trading doesn't go well, you're diversifying your emotional capital. If I have a loss right now in my trading, and I have had losses, I've got 5 kids, 7 grandkids, 4 rescue cats, a wonderful wife, a career that I love. If I lose money on a trade, big effing deal. It's like, it's one piece of my life, and yes, I want to learn from it, and yes, I want to do well, but it's in a perspective. When we put all of our energy and all of our focus on trading, we lose that perspective. So we can do all the psychological exercises in the world, and the exposure work is very helpful, the cognitive work is very helpful, but if we don't broaden and build our life, if we focus only on performance and P&L, we're going to be vulnerable. So the issue is to make trading important, but not all important. And to focus on our growth in trading, not just P&L, and to make sure that we have a P&L from our life's activities. What's our day-to-day P&L in life? Then the ups and downs of our performance will, good and not so good, but they don't rule us, and they certainly are not threats to how we feel about ourselves. Okay, so in conclusion, what gets measured gets improved, Anytime you want to develop something, you want to keep track of it. You want to measure it. That's why the trading statistics are so helpful. But tracking yourself when you have missed opportunities, tracking how you respond to those, you're keeping that learning P&L going. So we want to focus on growth and improvement. We want to evaluate our trading relative to the opportunity set. So for instance, I've had occasions where I get into a trade, it goes my way, I've got some paper profit, and it all reverses. What does that tell me?
It's not going in your direction.
What's that?
It's not going in your direction anymore.
It's not going in my direction anymore, and quite possibly there's not enough volume and volatility to sustain a trending move. I've just learned something about that market or about that stock. That I thought we could go higher, I thought we could take out yesterday's high, let's say if I've been buying, and it reverses against me, and I say to myself, damn, that should have worked. It didn't work. Instead of getting frustrated, it's information that can help set up the next trade. Now, if it reverses violently against my position, maybe I'm going to reverse the trade. If not, if the volume's really low, maybe we're just in a choppy range. And I'm going to adjust my trading for that, to trade reversal patterns. But the idea here is that we're evaluating our trading relative to the opportunity set. In a choppy, slow market, my P&L expectations won't be the same as in a nice, trending breakout market. Okay? And finally, in terms of the learning P&L, what the research tells us is that you don't want to set, how we do the monthly reviews, you don't want to set like 20 goals for improving yourself. That's like what people do at New Year's time, It's like, by January 15th, they can't remember any of them. Just set a few important goals. What did I do well that I want to build upon? What did I do that needs improvement? And I'm going to work those every single day and keep score, keep track, and that's going to make me better each day, each week, each month. So the idea here is to set a few high priority goals and work them hard each week, each month, so that our learning P&L is front and center. And that helps us put our missed opportunities, and it helps us put our P&L into a broader perspective. We don't get too excited when we make money, and we don't get too down when we don't make money. A key to all these techniques is the consistency of working them and building new habits of thinking, building new habits of behavior. Questions, comments? Yes.
So one that I wanted to ask, so I know obviously like Bella in some of his books, he talks about like that trader intuition. When it comes to FOMO, do you think that there could be any kind of either like correlation or any kind of relationship at all to sometimes that FOMO that you may experience could also be some kind of trader intuition telling you something? If you think that, okay, I'm kind of scared to get into this position, I think it could go in one direction, but you aren't 100% sure, but sometimes you do have that trader intuition. And so I'm kind of wondering if there is some kind of either relationship or correlation to FOMO and that like trader intuition.
It's a very good question, and that scenario is certainly possible. That I have an intuition that this thing could break out. It's getting more volatile, and I'm a little skittish about getting in. A lot of times that's what's known as performance anxiety, and so often the best strategy there is just getting in with very small size initially and building a position if you actually get the breakout. But yes, that could show up like a FOMO. Usually the FOMO occurs when the thing is already broken out and we weren't on board and we're telling ourselves, oh, I should have caught that. And now it's moved up, 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 and after a big move up, I can't stand to see it go up anymore. I lift the offer and, and that top ticks it. So usually that's the FOMO situation. But your broader point that sometimes if we have a fear, there could be an intuition behind it, that's a legitimate point. FOMO will lead, if it's classic FOMO, it leads you to take bad trades. That's how you know FOMO. Yeah.
How would you link the personality traits to FOMO? And what I mean by that is in terms of the big five, and especially with, for example, people, of course, who are high in neuroticism and probably have this problem more than others who don't.
Right, it's a great question, Radu. So the big five, there are 5 dominant personality traits in the psychology research. And the tendency toward negative emotions, which is sometimes called neuroticism. The flip side would be emotional balance. Some people have a very even temperament, not a lot of highs or lows, and some people are quite emotional, and they have a lot of highs, they have a lot of lows, okay. And so someone who has lots of highs or lows certainly could be more affected by FOMO. The thoughts about missing out and so forth could happen to anyone. But if we're more emotionally reactive, then that could affect us more. There's also a big 5 trait called conscientiousness, which correlates with discipline and being rule-based and consistent. And I think if we had a very high degree of conscientiousness, we'd be less likely to act on FOMO. We may feel the fear of missing a move, but at the end of the day, we're not going to break our rules and go chase a trade just because we think we're missing something. So yes, personality does play into these things. And there's some good personality tests that you can take to learn about your strengths and to learn about your traits. And if any of you are interested in those, I could certainly get you some links. So for instance, on that neuroticism measure, I end up being very low because I don't like drama, like in anything. And so if something starts moving away from me, I'm not going, oh, and then start wanting to chase it. Like, I just hate that drama. Like, that's not what I want to be doing in trading. I want to be understanding what's happening, acting on it, getting out, rinse and repeat. So in that case, I'm less likely to be influenced by the FOMO.
And would you say openness plays a big role in trading as well, or at a much lower level than neuroticism?
Openness to experience is another one of the big 5 personality traits, and it's correlated with creativity. When we are more open to experience. So for instance, my wife and I love to travel around the world. We go to different cities, we go to different restaurants and try different types of food. We love to experiment. Okay. That's openness to experience. Okay? That's correlated with creativity. And so that's very much related to our trading, because if we are very open to experience, guess what? We are very open to new ideas. And if we're open to new ideas, we're going to develop new ways of trading. And we're going to find some unique ways of trading. And so finding new edges in markets and trading in different ways, that's related to openness.
In terms of dealing with the learning P&L, and in the example that you used of when a stock goes in your favor at first by a certain amount and you're in profit, and then ultimately goes completely against you, what is your take on potentially not necessarily being short-minded or like scalping the opportunity, but at least kind of collecting profits along the way if you're one to kind of let that emotional toll of having the entire position reverse against you, being able to at least kind of capture size or capture profit along the way up while you're still in the profit zone, and then ultimately if it does go against you,
It's a great,
at least.
yeah, it's a great practice and something I do try to do. If I identify that it's a lower volume market, a lower volatility market, if it goes my way right away, I'm looking to take at least a piece of the position off to ring the cash register. Now, if it's a really slow day, I might take the whole thing off. I'm going to say, yeah, the volume's not there. Trees don't go to the sky. I'll make it take it. If it's an environment where a news item, a catalyst came out and the thing could really move because new players are getting involved and we can see that in the volume, then at most I would take off a piece of the position because I want to let the next piece run. And we can let the next piece run in the form of options, which helps our risk reward, because at that point we rang the cash register, and now the most we could lose is our options premium, right? Not bad, not bad. So now we've created a win-win, because as it goes further in our direction, you've got the convexity of the option position, so it's moving point for point with the stock. Boom, you've done well. If it reverses against you, you lose the premium, but you took profits on the first piece. Win-win.
I was going to say that way you're able to not only have the learning P&L in case the position goes against you, but now you're also able to have the capital kind of recollect, or the recognition as well. So that way, even if it does go against you in the long run, you're still able to mentally deal with the idea that you were correct in the short term. You kind of captured your profits.
Yep.
And if it goes against you after everything's all said and done, you're now able to kind of balance both out by taking the learning P&L and the fiscal P&L. And that way it doesn't have necessarily a toll.
And I think psychologically, that consistency can work very, very, very well. Yeah. But having a strategy in your head for when you take profits, what you let run, what would get in the way of that would be perfectionism. So that if I don't have my total full size on, for the whole move, it's not good enough. Perfectionism is a habit pattern of thinking. Cognitive therapy, the ABCD that I mentioned, works very well to deal with perfectionism. But that's what we're getting away from when we take partial profits, let the rest run. Because we're saying, for a piece of the position, good enough is good enough. Like, I don't have to be perfect. I can be consistent and I can do very, very well. And so you're cutting yourself slack, and psychologically you're creating a win-win, right? Because I win on the small piece, and if it goes my way further, it's a further win.
Why do you think so many people have trouble not just making goals, but just completing them? I mean, even with I know New Year's resolutions are hard and stuff, but I feel like so many people have issues or problems actually overcoming goals and problems in their trading, just in their trading.
Yeah, it's a great question. And we're good at setting goals, not necessarily good at reaching those. And a big part of that is because we need not only to set goals, we need very concrete plans for reaching those goals. And the plans are things that we have to do daily to build new habit patterns. So many times I look at a trader's journal and a trader says, well, my goal is to, I oversize positions, so my goal is to, not oversize things. My goal is to not overtrade. And so my response to their journal is, great, how are you going to do that? How specifically are you going to make sure you size things the right way? How specifically are you going to make sure that you are taking the right trades and not overtrade? And how are you going to measure that, and how are you going to keep score on that? So many times we don't reach the goals because we don't drill down and have very specific ways of working on those goals. Okay? So I have a goal that I want to improve the communication in my marriage. Great, that sounds wonderful. How am I going to do that? How do I improve the communication? Well, maybe by spending more quality time together. What does that mean? How would I spend quality time together? And how would we communicate in that quality time? Et cetera, et cetera, et cetera. But I drill down so that I have very concrete things to do each day to work on the goals. Every goal needs a detailed plan. Otherwise, if you have a goal without a detailed plan, what do you have? Wishes, a good intention, a good intention. That's all you got. That's all you got. And that's what a lot of traders' journals are, a bunch of good intentions. Yeah, that's fine. That's fine. It's better than bad intentions. But that's not going to change behavior. Well, I think we're getting on in time. I want to thank everyone. I want to thank SMB and Kurt specifically for recording this and making it available. And my contact information is available on my blog site, traderfeed.blogspot.com. And I want to wish you the best in your trading, and may you miss many opportunities and profit from many more. Thanks.